Hello there! Lecture Series 19 of Bite-Sized Corporate Reporting focuses on IAS 34, Interim Financial Reporting. Important to note that IAS 34 does not mandate which entities are required to publish interim financial reports, nor how frequently should entities prepare interim reports. Additionally, IAS 34 does not stipulate how soon after the end of an interim period should an entity make available its interim report. These matters are left to local regulators, that being governments, security regulators, stock exchanges, and accountancy bodies. So then, what is the objective of IAS 34? IAS 34 prescribes the minimum content and the principles for recognition and measurement in complete or condensed financial statements for the interim period. The following terminologies are used in IAS 34. 1. Interim period, that is a financial reporting period shorter than a full financial year. 2. Interim financial report, which is a report containing either a complete set of financial statements or a set of condensed financial statements. A complete set of financial statements are those as described in IAS 1, Presentation of Financial Statements, and shall include the following. 1. Statement of financial position as at the end of the period. 2. Statement of profit or loss and other comprehensive income for the period. 3. Statement of changes in equity for the period. 4. Statement of cash flows for the period. 5. Notes comprising material accounting policy information and other explanatory information. 6. Comparative information in respect of the preceding period. 7. Statement of financial position at the beginning of the preceding period when an entity applies an accounting policy retrospectively or makes a retrospective restatement of items or reclassifies items in the financial statements. IAS 34 specifies an entity preparing interim financial report shall at a minimum include in its condensed financial statements each of the headings and subtotals that were included in the most recent annual financial statements and the selected explanatory notes required by IAS 34. The explanatory notes required shall provide an explanation of events and transactions that are significant to an understanding of changes in financial position and performance of an entity since the last annual reporting date. IAS 34 presumes that users who read the entity's interim report will have access to its most recent annual report, and consequently, IAS 34 avoids repeating annual disclosures in its interim report. Examples of disclosures are write-down of inventory, recognition of reversal of impairment loss, acquisition and disposal of property, plant and equipment, correction of prior period errors, and changes in accounting policies. The same accounting policies applied for interim reporting shall be applied in an entity's annual financial statements. IAS 34 states an entity should use the same accounting policy throughout a single financial year, and as such, if a change in policy is made mid-year, the change shall be applied retrospectively, meaning previously reported interim data is restated. This is consistent with IAS 8's treatment on changes in accounting policy. With this, we conclude Lecture Series 19 on IAS 34, Interim Financial Reporting. The next bite-sized corporate reporting lecture series will look at IFRS 16, leases. Till then, thank you.